Good morning. It's Friday, August 30th, about 6 a.m. Central Time. Last trading day of the month. So overnight precious metals are slightly weaker after yesterday's snapback rally in the gold market and slight recovery in the silver market. We saw stronger GDP data, slightly lower initial claims, which meant higher stocks, higher yields, and a little bit of pressure on the gold market. So if you were stopped out in early trading yesterday, that's what got you. So looking at the overnight trading price action, we do have December gold down $10 at $25.50. Kind of likes to anchor around that $25.50 right now. Looking at December silver down 14 cents, $29.85. Poked a couple times over 30 bucks in the last couple sessions. December copper, that's kind of the big mover and shaker overnight. Up 320 at 425, and then finally October platinum down $4 at 942. So something I do is when the economic data, when you get a bundle of them getting released at once, I'll kind of write down what happened in the precious metals markets or any kind of big mover and shakers. That's why when I noted that, hey, we saw the price action in gold decline just a touch, and we saw slightly better GDP, slightly lower initial claims. We'll note that type of development for next month, and we put that in the calendar. So I'll go to next month's calendar, and I'll write down what happened in the previous month as far as price action. So looking at a couple things here today on the last day of the month, you guessed it, what I do is I look at the month-to-date performance, and this is as of this recording. So going from worst to best, you got platinum down 4.39%, copper up just slightly, but it's most likely going to end up around unchanged on the month. Silver up 1.74%, and I attribute that to gold's 3.2%. So looking at some things coming out here today, we are going to have PCE that is in focus. So I expect a lot of the volatility and a lot of really the volume come out of the market once we get this PCE data out. PCE data is the Fed's preferred inflation gauge. They're expecting 0.2% month over month. We'll also have personal income, personal spending, Chicago PMI, University of Michigan consumer sentiment, and then University of Michigan inflation expectations. So something that I've also been discussing over the past several trading videos, that seasonal analysis in gold and silver for September tends to be a bit negative, but I'm going to send out an email with all the breakdown of the 5, 10, and 15-year analysis of the gold and the silver market. I'll even back test it for you where it says if you had bought on the 2nd and you sold out around the last day of September, what that did for your account historically. Now remember, past performance doesn't reflect future performance, but this is something that I really believe that any trader who's very serious about futures trading and about trading in gold and silver should have. So if you haven't done so, register for a free 2-week trial, The Metals Edge. It'll be in the description below with the link, and we'll get you all the daily updates with all the levels and everything else, the analysis that I use to trade these markets. Now, the title of this video is what could cause silver to explode that no one's really talking about. In China's central bank, and remember, 54% of the demand, actually up to 64%, is industrial demand for the price of silver. So in who's the largest consumer? Well, it's mostly China. Same thing with the copper market. Mostly China is the largest consumer. So China's central bank bought 10-year and 15-year government bonds from the primary dealers on Thursday. And you guessed at what happened at that point in time. That was about 3/4 of the way through the session. That's when gold, silver, and copper all made highs on the day. Now, it was the first such bond purchase in nearly 2 years, and that brought back speculation that the central bank is preparing to intervene in its domestic debt market. The silver squeeze narrative could return if you get China back in the mix. Now, guess what else happened overnight? So this is a brand new development, and that's probably why that copper market is up right now. The other big boost for the markets came from China. Bloomberg News reported that it is considering allowing homeowners to refinance as much as $5.4 trillion in mortgages, lowering the borrowing costs for families and boost consumption. So if they lower those borrowing costs, they don't let people refi. What they do is they kind of keep things, you are either locked into this rate or the rate adjusts over the year, but it doesn't refi. So they'll allow people to come in because of the fact there's been excess speculation in the Chinese bonds. They've pushed interest rates down significantly lower. It's right around like 2.14%. It'll allow those people to refi at that level, take that cash out, and then spend that in the economy. So if you get that kind of stimulus, at least the ball rolling. So this is 2 days in a row that they've done something. You really want to watch things like copper. That's your first clue. If we see copper futures break above about 430 on a closing basis, the bells should go off in your head, regardless if you're a silver guy, because of the fact that the correlation between silver and copper is so high right now. It would get above its 50-day moving average. It would trigger a bullish trend on the daily chart using the trend discovery system that I use. And then what you want to do is you want to look at the silver market and see if silver breaks through. And write this down. This is the key level on silver. $30.54 on a closing basis. We close above there. There's quite a bit of empty space up to $32.50. So I believe that we could easily draft higher to that level, especially if you get Chinese stimulus, copper futures triggering the bullish trend, and then you get gold futures right around this all-time high level. It sets itself up for a great recipe. So do yourself a favor, register for the Metals Edge here. Have a great Labor Day weekend. I'm going to map out some levels here. I'm also going to look at some option strategies if we did break out over that 30.54 going up to the 32.50. So I'm kind of hinting at some strike prices that I would look at, and I would probably do it in the 30 to 60 days. So not a formal recommendation because this is a public video here, but if you want the specifics, reach out to me. Again, my phone number 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Have a great time barbecuing and fishing and spending time with your family and your friends over the weekend, and have a great one, and we'll see you here on Tuesday. Good luck, good trading.